Hello and welcome to NDTV Profit. Just a few minutes back, we've had two key economic data that's come in. First, CPI inflation, it's come in at 5.55%. That's compared with 4.87% in October. So while figures for CPI for November are at a 3-month high, what's to be noted as well is that it's also lower than expectations. A panel of economists polled by Bloomberg had estimated a reading of 5.8% for November. So that's one good news. On the other side, industrial output is also presenting good news. It's come in at a 16-month high of 11.7%. To share her insights on both of these figures, we have with us Upasna Bhardwaj, Chief Economist at Kotak Mahindra Bank. Ma'am, thank you so very much for taking time out.
Yes, hi.
So fair to say that both figures have surprised on the upside?
Absolutely. I think it's a pleasant surprise because inflation is softer than expectations. And the industrial production data has come in higher than expectations. So it's a very good combination of data prints that we've seen today. Having said that, if we were to look at the breakup of inflation, much of it is food price led. I mean, it was expected to be largely. But I think what is important to keep in mind is that the softer than expected inflation is something which we'll have to be watchful about, because food inflation is slightly softer than what we thought it would be. And I think there will be some spillover seen over the next 1 or 2 months. While vegetable prices do tend to see a reversal very quickly once the supply side issues get resolved. But it's more the cereals and the pulses wherein there are structural problems. There are supply side interventions which the government is taking to ease some price pressures. But despite that, we are seeing that weaker production, reservoir levels being low, all of that is likely to persistently keep pressure on food prices intact. So we'll have to be watchful on the food price trajectory going ahead. But overall, for today's numbers, I would say, yeah, it's a pleasant surprise.
Okay, so cereal prices have actually risen 10.2% in November. Pulses inflation is at 20.2%. And vegetables, of course, have risen 17.7%. But like Upasna has pointed out, that might not be as much of a concern as maybe cereals and pulses, because that's also expected to ease a lot faster. So, to elaborate a little bit more on pulses and cereals, like you said, we've been seeing steadily high figures, and it's been quite some time. And that's despite significant government intervention, several supply side interventions and measures we've seen over the last few months to rein in prices. So what's it looking like? Like even currently, Rabi sowing for pulses, and I believe even for cereals such as rice, has been trending a little bit lower compared to a year ago. Can we expect recovery through December?
My sense is this is going to continue. So cereals and pulses, as you've mentioned, and I also mentioned before, the production is down. The Kharif sowing happened, which also showed that cereals and pulses production is likely to be lower. Rabi is delayed and again seems to be softer in terms of sowing patterns. And at the same time, erratic rains are also happening off and on. So cereals and pulses inflation, I think, is going to persist going ahead despite government intervention. And this is something which we need to be watchful about. I don't see too much respite happening right away because overall production definitely is going to take a hit for the year round the year.
All right, and moving to core inflation, it does appear, glancing at the data, that much of the reprieve that we have seen in inflation continues to be from core inflation that essentially excludes fuel and food.
Yeah, absolutely. I think that's the biggest, I would say, the good news in the whole of this headprints that we're looking at. Largely, the headline numbers are split between food and core inflation. Food inflation clearly was supposed to be the key driver of inflation on the upside, which has happened. On the other side, we were expecting softness of 15 to 20 basis on the core inflation side. And that too, again, has happened. So I think that is one big trend that we are observing, which will provide a lot of respite to the central bank, largely because one has to weigh how permanent and how real the price pressures are. And core inflation does give us the demand side price pressures. So somewhere the pass through of the monetary tightness that has persisted is seemingly weighing through the economy, and we are seeing the impact of that on continued deceleration in core inflation trajectory.
Okay, and before we can move on to the other figure that's come in today, that's IIP, I'd like to ask you, what's the trajectory going forward? So you've said that some of these food price pressures are expected to persist. Is that, while that's definitely going to be the case in December, what's the way forward after that?
For the next two readings, we have numbers higher than 5%.
Okay.
And after that, we see moderation for the February and March reading to a tad below 5%. So overall, RBI has given a projection of 5.4% for the full year. And I think that doesn't really seem too much of a risk. We too are at 5.4%. So broadly, I think the next two quarters, which RBI has given, there could be a slight softness to the numbers depending on how much of correction we see in the vegetable prices. But barring that, I think broadly 5.4% can be easily achieved. So I don't see too much of a risk there. It will be managed as per what has been directed for now.
Okay, all right. And now moving to industrial output, of course, very strong figures coming in from there as well. To begin with, help us understand if this is largely because of the base effect and the festive season. Is there reason to continue to feel optimistic?
I think, yes, you're absolutely right. Base effect has played the biggest role in driving these numbers. We were at 10.2%. The number is higher than our expectations. So clearly, despite accounting for base effect, the number is higher than what we thought. So sequential pickup is also there. Yes, a large part of this is festive linked, and we don't expect such high numbers to persist. But otherwise, if we look at overall activity, the high frequency data, that continues to point towards resilience. And that is the reason I think while such high numbers may not persist in high double digits because of base effect wearing off over a period of time, maybe one more reading could be in double digits and we start seeing moderation. But overall, sequentially, I don't see too much of a problem persisting because growth will hold on. As of now, we're not really seeing too much of a risk. Of course, it is going to be slower than the H1 that we've seen. We've already seen the GDP data that came out, and we have overall seen RBI also revising upward their GDP numbers to 7% for the full year. But second half of the year is expected to be relatively softer than the first part of the year. And that is something which we will also see in IIP numbers. Post the festive season, there will be moderation and it will be growing in single digits and not really persisting in double digits.
Okay, so while that's on IIP, like Upasna said, there is scope. There's a high chance that we will see some moderation going forward. Upasna, so far, like you also touched upon, other high frequency indicators being fairly strong even post-October and for the ongoing quarter. Can we expect some upward revisions to forecasts for the ongoing quarter as well?
In terms of GDP?
That's right.
This current quarter looks to be closer to 6.5, 6.6%. That's the run rate that we see. And I think there's not going to be too much upside to that. But we do see, what I can see is that the fourth quarter, how the momentum sustains is going to determine whether there's upside to our own numbers of GDP for the fourth quarter. Our fourth quarter estimate is currently at around a little below 6%. And I think there could be some upside coming if the resilience in activity continues. So not to my third quarter estimates, but I think the fourth quarter estimates do have some upside if the current run rate on high frequency data was to continue.
Okay, so while the overall picture for the economy does look fairly robust at this juncture, what's your reading of the rural economy? That's been presenting a fairly mixed picture for quite some time now. What's it looking like at this juncture? And do you think that you're seeing sort of shoots of revival there?
Again, I think you correctly pointed out the rural demand side looks a little mixed to me. most of the data is mixed. Like if you look at the rural wages, that's holding up well. But the other aspects which we've just discussed from the food inflation side, that also works on the flip side adversely for the farmers as well. So there could be some downside coming if the rabi production is not at par, and we'll have to see if some kind of support does come from the government to the farmers. But at this point, I think the high frequency data is fairly mixed, and it's difficult to say whether there's too much downside to the demand. But I would say it's mixed. That's what I can say at this point.
All right. Thanks a lot, Upasna. But before we let you go, what's your expectation after looking at these prints for inflation as well as for IIP for the next month?
Like I said, for IIP, we will not be expecting a double-digit number. I mean, right now we'll have tentative numbers. It should be closer to 6% or so. That's because the base effect is wearing off. So it has not anything to do with the sequential momentum. It's more about base effect wearing off. So I think it will be in single digits, but a little to the north of 5%. We'll have to concretize these numbers later once we get more data. For inflation, it will be high. I think it's higher. It's going to be higher than 5.55 that we've seen today. So the next reading should be higher before we start seeing moderation. We still have some more vegetable-led inflation, which has to seep into the current month's reading, and then after that we start seeing moderation. So we're expecting a little higher number than 5.55%.
All right, thanks a lot for that, Upasna. So CPI and IIP both better than expectations. Stay tuned, we'll continue our coverage on NDTV Profit.